What's happening, y'all? Welcome to weekly portfolio update. This week, I'm gonna do it a little bit different. Usually, I give y'all the portfolio update and before getting into the educational piece, but I want to try something different just to see if I could get more people to join, more people to view every week. So first, we're gonna get into the educational part. Just like the title of the video said, we're gonna talk about the VIX and how to use the VIX to buy stocks, right? And the VIX is a volatility index. So let me pull it up on Chat GPT so y'all can see what I'm talking about. So the VIX is a volatility index. It's a fear gauge, and it basically moves in the opposite direction of the stock market. You have a lot of things that move in different directions when the market is going up or down. A lot of times oil may move in a different direction than the stock market. Gold might move in a direction of this different direction of the stock market. Bond yields can move in a different direction of the stock market. Those all are sometime-ish and in most of the case, but the VIX is really the only true thing where you could truly identify exactly because it's designed to move in the opposite direction of the stock market. So when the VIX is going up, the stock market is going down. When the stock market is going down, the VIX is going up. So by using the VIX, whether you're a long-term holder, buying shares, or day trader, the VIX is very important to help you identify what direction the stock market is gonna go, right? So I'm gonna pull up the VIX so y'all can see what the VIX looks like on a chart. And I'm gonna also show y'all what I think the stock market is gonna do. I know September is the worst month in the stock market of the year. So we're towards the end of September. But also as we look at the VIX, I wish I wasn't in the way because it's over here at the MACD. But remember, when the VIX is going up, the stock market is going down and vice versa. So looking at the MACD, I wish I could move this over so I'm not in the way. Let me do that. Um, so if we look, remember you read charts left to right. And if you look all the way over to the right on the MACD histogram, the MACD, I talk about it in so many other videos if you haven't seen it before, but the MACD, what I'm making larger and smaller down here, as you can see, the MACD is starting to cross over, and it looks like on Friday we got a red bar on the MACD. So the MACD is going down, which means the VIX is expected to go down, which means the stock market should go up, right? September is about to end in another day or two. The VIX is the MACD on the VIX is showing that the VIX should be going down, which means if we base it off of the VIX, then the stock market should be going up based on the VIX, right? Um, so let me also pull up the fear and greed index real quick because I also use the fear and greed index as a gauge to see which direction I think the market is going to go, right? So this gave us an idea of which direction we think the stock market is going to go. The fear and greed index tool, that's really just showing you how people are feeling about the market. When people are fearful, you want to buy. When people are greedy, you avoid buying. Right now, people are kind of neutral. So that doesn't really tell you much. It really just tells you how people feel about the market. The best tool truly is the VIX. So now we're going to get into the portfolio update. I'm going to tell y'all what I plan on buying next. And I'm going to give y'all some stocks that are down year to date and really good buys. You want to buy stocks when they're low, right? So we're going to get into the portfolio update. Looks like we have about 3,600 in assets. Looking to add more tomorrow, to be honest. So you will see a change in the portfolio next time you see the portfolio date. NVIDIA, we got 12 shares total. With all honesty, next week you're either going to see me add more to NVIDIA or I'm going to buy something else. And what I'm not going to tell you exactly what I'm going to buy, but I'm going to mention it as one of the things to look out for as far as investments to buy, right? So I'm going to mention it, but next week you'll see which one it is. So we up about 25% on NVIDIA. Is 58% of the portfolio, right where I kind of like it to be. You want, 55 to 65% of your portfolio to be your tech play, your front runner. You know what I mean? Your investment that's supposed to really drag the portfolio, right? So NVIDIA is my investment that I expect to take the portfolio running. We gonna look at United Healthcare. United Healthcare, by using the charts and stuff like that, that's how you snipe out a position like United Healthcare, like how I did. You know what I'm saying? United Healthcare, we only got 1.5 shares. I really want to add on to them, to be honest, but we up $132 on United Healthcare. United Healthcare is doing good. NVIDIA, of course, will continue to do good. We coming up on $4,000 in assets. Once we get to about a 10,000, I'm gonna really show y'all something crazy. Like, I'm gonna really show y'all how the big boys play this game when we get to about 10,000 shares. So looking at the VIX, September also ending. It looks like the stock market. Let's look at the S&P 500 and compare, see how we doing versus the S&P. So the S&P 500, I think I got about a half a share of that. Yeah, 0.54 shares of the S&P 500. And this is just dollar cost averaging, y'all. When they tell you the dollar cost average into the S&P 500, I'm literally just putting $20 a week on rotation. I'm not doing it myself. The brokerage account is automatically taking it out like a Netflix account. And we're up 11% on that money. A total of $548 total, but $33.87 of that is profit, right? So we still got Alibaba, we still got Robinhood. Alibaba, I want to add more to Alibaba. I want to add more to United Healthcare, and I want to add more to NVIDIA. Right. But now let's look at us versus the market. And then I'm going to give y'all some investments. Since we know the stock market is going to go into the best 3 months of the year, starting in October, November, and December, it's time to buy. So we gotta know what we're buying when October starts, right? So if we look at us for the past 3 months, we are up 11.7%. All right. The S&P 500 is the average. So you always want to compare yourself to the average. In the last 3 months, the S&P 500 is only up 8%. So we beating the S&P over the 3 months. The past month, the S&P is up 2.83. And in the past month, we are up, let's see, in the past month, we are up 3.26. So, I mean, not too crazy in the past week, or in the past month, but in the past 3 months, we've been crushing the S&P 500. So before y'all get out of here, I'm going to give y'all some top investments that I like. Now that we had the September dip, you know what I'm saying? September is Black Friday in the stock market. So September, you really want to hold on to cash and then drop cash heavy in September. So I really like Adobe for multiple reasons. Adobe has a really high gross profit margin. They maintained a gross profit margin, I believe, over 80%. So they make a lot of profit, but they're also down year to date. Adobe is down $87 year to date, which not only are they extremely profitable, but they are on a discount. Adobe is an excellent stock to buy. Down big on a discount. And United Healthcare is still on a discount. Don't think because I've been talking about it for a long time, oh, I probably missed the run up. United Healthcare is still on a discount. I really like it. It is insurance in your portfolio. So United Healthcare has been up probably $100 in the last month, but United Healthcare is still down $164 year to date, right? You gotta love it. You gotta love when you get a good company on a discount. I'll take it. All right, we got another good one. Now, this one is not as much as a discount, but we might have missed the run of this one. But Tesla has been down big. It was at in April 221, and now it's at 440. Tesla is on a run right now. It's going crazy. When you see stuff in the news, Elon Musk and Trump and all of that, and people boycotting Tesla, this happens on repeat. It happened with Facebook with privacy issues. It happened with Apple with they're not doing as good as Google. It happens with every tech company. Recently, it seemed like it's happening with Nvidia a little bit, with China deciding not to use Nvidia's chips. When you have companies like Apple, Amazon, Google, Nvidia, they get bad news, that's just a setup, man. That I'm telling you, it's just a setup for rich people to buy at a lower price. Don't let them scare you out of buying more of a valuable asset at a lower price. Don't let them do it. And I'm gonna go to with an ETF. I really like this one, and I believe I mentioned it before. But SPMO is a momentum index. It's a momentum ETF. I'm not gonna lie, man. I might even like this ETF more than Invesco QQQ, to be honest. We're up 25% year to date, and it's a momentum ETF. So this ETF is changed and altered based on who is leading in the market, right? So there's no specific like, oh, this is healthcare, this is tech, this is nah. If oil is leading in the market, then they're gonna put oil in it for 3 months period until it's time to switch and swap out. I really like this ETF, low cost ETF, and I mean it's one of the best out there for just $120. Before I go, let me give y'all one more stock. Let me give y'all one more stock I really like. Um, uh, and we talked about this one before too, but I just want to express the significance of investing in China. Investing in China is very important. You don't want most of it, your portfolio, to be in China because China markets are volatile. But we do know that China is going to be the world power, right? So Alibaba year to date, if you jumping in Alibaba now, you missed up a massive run up. They're up $87 year to date, which is 104%. We own Alibaba. I think we only have 0.5 share of Alibaba. Yeah, we got a half a share of Alibaba, only 2.4% of the portfolio, but we got an average of 139 when the stock price is 172, right? So it's up a lot. If you feel like you chasing it, I want you to look at this. Now, over 5 years, it's still down. It's still down 103%, right? $103, 37% in the past 5 years. So as far as the recent run up, yeah, you kind of late to the party, but Alibaba is still on a discount, right? And another metric you want to look at when you're looking at stocks on a discount is their PE ratio, which is their price to earnings ratio, right? And as you can see, Alibaba's PE ratio was 19.4. That is an excellent PE ratio. The stock is cheap. I'm gonna get out of here, man. I'm about to get ready. Me and my wife going on a date. But every Sunday, man, I give you a portfolio update with stock market education. So that way you can outperform the stock market, whether you are investing later in life and need to catch up on gains, or if you're young and you just want to retire early and get super rich. That's what this is designed to help y'all with. Help the average person with investing in the stock market, literally just buying shares, fractional shares, learning how the economy works, how to always have something in your portfolio working for you. I'm gonna give y'all all that every Sunday, man. Just make sure you like and subscribe.